Hello and welcome, everybody. This is Chart Request Live. We do this twice a week, every Tuesday and Thursday at 1 o'clock Eastern Time. It's always myself. I'm Steve Straza, Director of Research at All Star Charts, always joined by my esteemed friend and co-host Patrick Dunawillow of the Chart Report. What's up, buddy?
You ready for our favorite time of the week?
I mean, did we get through half of them on Tuesday? At least half?
We had a lot left over, but we just get excited. I think we just delve into these tickers, and you and I can go on tangents for days. So
let's go right into it.
Let's just dive right into it. Yeah, skip our thoughts on it. Let's go right to it.
We're gonna do our best to get through the whole thing. I think we could do it.
I think it's a good goal, at least. If we fail, it's all right. At least we try.
Josh, at the top of our list here with, I love it, Josh, SoFi.
SoFi. I saw this one on a list. If you go look at the chart report yesterday, I dropped an article in there. It was basically like a list of stocks that were going against analyst recommendations. You know what I mean? Like basically stocks that are trading furthest from their average analyst price target. And SoFi was on there because it's made a big move relative to what analyst expectations thought. And, stocks like that, they're candidates for analyst upgrades because all of a sudden analysts are on the wrong side of the trade and they have to adjust their price target so they don't have egg on their face, right?
It seems like a lot of stocks are in that group that you're talking about.
Absolutely, yeah.
I'm just seeing a big chase game from the sell side community, really since October, but amped up since the start of the new year. It's just upgrade, right?
Yeah, and I think that's also like a product of the overall market environment, right? Because the whole tide of the market is moving up. Now they kind of have to adjust all those things that they might have had bearish price targets on because of recession calls, all that. But anyway, so this one holding a clear line in the sand, $8. You can see that was this shelf of resistance here. And it's been a mess. We kind of just been chopping around it. So that's been a kind of messy one. But as long as we're over there, I would look towards like this 14 level, or even, with IPOs, with IPOs, you always want to be cognizant of the IPO price or even the IPO high or IPO low. Those can be really important turning points that come into play later on. They can come into play years later because those are big events where big players who hold a lot of shares are making big decisions. And that's what kind of creates the significance of those either IPO price or IPO high, low. And you can see
spot on
here, every time it kind of came into those IPO levels, just struggled, right? So,
yeah. You know what? This one reminds me of Pinterest. I think we talked about it Tuesday or last week. IPO highs came in like at the right spot.
Yeah, great movement. Yeah.
So you see this a lot, like Patrick's explaining, right? We see this all the time. So we're ready for it. With this chart, though, there's two levels. There's the base breakout, and then I think that IPO level gives us the confirmation. No?
Yeah, absolutely.
Telling us that.
Yeah. I mean, you could kind of put it there. So I would say if it's above that 1050 level, I'd play it back to this 14 level. You can see this is kind of a congestion area here. I'd expect it to get a little messy there. But between 1050 and 13, it's a nice little pocket. Could move pretty quickly there.
8.25, confirmation 10.5. I think this one is very actionable right here, right now.
Well, you know what? We're in a weekly, so we could drop it down. I really like here that, it pulled back after a nice little move higher. Look at RSI down here. I mean, that's holding really nicely above or kind of near 50, near the midpoint, but certainly not anywhere near oversold. So that's what you want to see on a pullback. That's momentum. That means that the stock, when the market turns around or, when the pullback's over, whatever, should pick up again. And earnings at the end of the month, Monday, the 29th.
I'll just say two things about this one.
Yeah.
Price target, old highs, fundamental picture, this is a real business, right? You know, your friends probably use SoFi Bank. I know Spencer uses it all the time, so we get that information, that boots on the ground research from him. Like this is
Hey,
a
we
real.
were at the stadium not too long ago.
We were at
SoFi
the stadium,
Stadium, beautiful stadium.
the most amazing football stadium I've ever seen in my life. I think it would be very hard to beat. I've never been to Dallas. I know I've heard things, but I think it would be hard to beat.
Well, it's
Anyway,
new. It was brand new, clean. Anyway, let's move on.
they pay some of the best interest rates too on the street.
Do they?
Yeah, which no one
Wait, so
expects.
what are they exactly? They're not a Robinhood. Are they a robo-advisor or
It's a startup. It's trying to be a financial everything company,
uh
but they're very much a retail bank that gives you more bells and whistles that a younger person or a more tech savvy person might want, from what I understand.
this might be a stupid question, but like wouldn't you expect it to have the same headwinds and tailwinds as like a regional bank?
Yes, and also no. Right?
Minus like the physical locations, which I mean, at this point, how
Typically,
much?
it's a great question, Pat. Like typically when you enter a new market, there are so many barriers to overcome. And I think banking, at least in America, Canada, it's the complete opposite. There's like five banks and you have to do certain things to be one of them and you can't enter. In America, it's like, yeah, start a bank. That's why I love capitalism. A lot of them fail. Maybe most of them fail. Outside of biotechs, I would say there's more banks than any other subgroup in the entire U.S. stock market, right?
Really?
Yeah,
I mean,
well,
I'll
there's
say
a reason
this.
for that.
When the whole regional bank thing was going down, I remember pulling up the KRE and looking at the banks in there and being like, there's 140 regional banks in the KRE. I mean, who needs 140 regional banks? But
Right,
to your point,
right.
uh,
It's a low barriers to entry situation, right? So they'll come and try. What I like about SoFi is it's like half tech startup and half financial,
oh,
right?
okay.
These guys are trying to use everything that they've learned in Silicon Valley over the past 2 decades and then apply that to the banking industry.
Now, are they in ARCF? I imagine something like
Yeah,
that would be
totally.
perfect in ARCF. Yeah.
I would think so.
Yeah. And of course, I'm talking about Kathy Wood's ARC FinTech ETF here.
But the bottom line is you get a little bit of both, right? We come on here, we talk about speculative growth stocks, these startup tech companies. And then we talk about how good banks look and how we think that investors are mispositioned in terms of financials coming into this year. This one checks both of those boxes where it's financial enough, but it's also this is arky at the same time. So
Yeah.
I really like it.
ARChy.
And the chart shows it, right? So and then just to one more point on that before we move on, we're going to find out a lot about the banks. Don't overthink the price action today. We're going to find out everything we need to know tomorrow
Oh, yeah.
when they start reporting tomorrow morning. Okay, next up, Dan, PRCT for the next 3 to 6 months.
Wow, look at that. Dan, good eye. Really good eye. He knows what we like, Steve. Oh, did we lose Steve? But this one, clear line in the sand right here. Well, it's a little thick here, so we'll have to adjust it. But you can see, looks like it went public in 2021 and just, man, this like 50-ish level has been the ceiling for this thing. Let's see. Yeah, we touched it right after the IPOs. Couldn't do it here in September 2022. Here we are making, call it what, the fourth, fifth attempt. And you know, the way we think about levels of support or resistance is kind of each time they're touched, it's absorbing more of the supply in this case at that level, theoretically. And so every touch, you're kind of getting closer to a breakout. So if it does, I would call it this level 50. So if it's above 50, and that's like an important psychological level too, that might sound silly, but you know, when you're dealing in a stock and you have certain operators, they get used to transacting at a certain price. And especially when that price is kind of a nice round number like 50 or 100 or 25, things like that. So breaking 50, I think then you pull out your fib tool here. I usually try to draw the fib from a major decline, and this one is pretty much that. One of my mentors, James Bartoloni, he knows a ton about Fibonacci and all that. He kind of describes it as the rock hitting the water, where you draw your fib from. So you want to try to hit it from a major decline, and then you're measuring the ripples, basically, is how he described it. But anyway, so rock hitting the water, 67, 68, I would be looking for a price target. So $50 gets you 67, not a bad move at all.
No, this
What do they do? Are they bio
they're medical devices.
devices? Oh, wow. And medical devices, those were really thrown out in October. I mean, they've been struggling for a few years now, but last time I checked, medical devices, this is IHI, the ETF, they were the strongest since stocks have been rebounding these past 3 months. So, and I think biotech's right behind it. So medical devices making a nice comeback. PRCT, that's what that was? Yeah. Biorobotics. Look at that.
You know what this one reminds me of though?
What's that?
This is like the healthcare version of super microcomputer.
Okay, what's that? Are you reading the description or?
Okay, this is the company.
I mean, hey, that's not bad.
It's not bad.
You're talking about one of the best performing
I'm not
stocks
talking
last year.
shit. I'm just talking about marketing. And I think we can so easily ignore how much marketing goes into movement and prices. So this one is called
This is what Steve's talking about, by the way. Super microcomputer, just an absolute winner last year.
Because it says super micro computer. So we have to joke it's like super micro computer metaverse.
Right. Well, you can tell they were really leaning into the zeitgeist or the it thing in the market, which was AI and all that.
Typically, you want to run from a stock that names itself anything like that. I dropped one in the chat yesterday. I can't find it right now.
Riot blockchain and all those.
No, it was something with AI in its name. It wasn't C3 AI. But anyway.
Oh, there was a company. Oh, yeah, I was going to say there's just AI.
Stop. PRCT. Procept Biorobotics. A lot going on there, right? They're hitting a lot of keywords.
Yep.
When I see that, I'm like,
robotics.
Like for this market, and we saw it back in 2018, 2019, anybody who was changing their name to something blockchain, run from it. And seriously, you can go back today and find that it had 100% hit rate. Anybody who changed their name in that cycle to something blockchain didn't work. This one's Biorobotics. Like we just see this a lot. The chart looks great.
It does, yeah.
The name is very sketchy. The name is very
yeah. Well said, because a lot of those charts look even sketchier, right? The ones that have the weird names, a lot of times they're a SPAC.
Here's another one, Pat, up next with another interesting name, but I think technically and fundamentally it's different. Datadog, DDOG. Me? We're losing Patrick here, guys. We're flipping to Datadog next. We have Pat's charts, I believe.
There.
What I can see. We lost Pat's mic.
Okay, there we go. Sorry about that. So, really clear level here, right? Really.
120.
That's That's your line in the sand. I mean, and we talked about, round numbers and that's I'd throw that in that bucket, but look at that. I mean, you had way back in 2020, this was a problem. You finally broke out, partied for a while, held for support for a little bit, but then it broke and then you're back to it acting as resistance. Here we are trying to break above it. If it's above 120, there we go. Just ticked above 120 as we're talking. If it's above 20, I think you play it back to the old highs, right around 200 almost.
Yep. Couldn't agree more. Let's just move right on.
Yeah, I mean, I think that one's super simple. Yeah.
This chart looks as good as anything.
120 gets you 200.
Like
Yeah.
if you're looking for an actionable entry right here, right now, this is a good one.
What are they? Are they cybersecurity or?
I believe it's application software. Next up, Jonathan, RYTM. I think it's Rhythm.
Oh man, another good one. They're bringing good ones. And you know what? I like that this is in a pond that we want to be fishing in. This is
Yep.
pharmaceuticals. Pharmaceuticals right now look awesome. This is PPH. This is one that we've been covering in our reports recently. You can see base on base here, call it a cup and handle, whatever you want. That's an accumulation pattern that's bullish. Pharmaceuticals look great. Biotech looks great. This one, was that? RTHM?
RYTM.
Or YTM? Yeah.
This one reminds me of Immunocore.
Immunocore.
Yeah.
I haven't heard that one in a while. Um,
That's how I know Patrick doesn't watch the morning show.
I try. Sometimes it's a little early for us on the West Coast. So 40, I think, is your line in the sand here. We're already kind of above it. Looks like we broke out a couple weeks ago, in mid-December there. You're getting the nice successful retest here. Buyers are showing up where they have to. Again, above the IPO highs nicely. I think, we could fib this one out, get a price target, but a common question with these fibs is, do you draw it from high to low or close to close? And one of the tricks that I think, Steve, I'll speak for you, that we use sometimes is we'll do it from high to low, and then you also do it on a closing basis, right? So we can change that color, make it green here. And then you get a range. So now we know, okay, we want to be taking profits somewhere in that range. So call it maybe 65. But if it's above 40, you want to be looking up here for your next resistance level, somewhere between 62 and 68.
Pat, I love what you did here. Okay. He's flipping to a chart that shows you only weekly closing prices. Day traders hate this. Trend followers will tell you this bought them their mansion. Am I wrong?
You're absolutely right. Yeah.
It's a time frame thing. It's a personality thing too. But this is the way to really analyze a chart if you have a time frame that's anywhere as close to or over a year.
Yeah.
Where is it going out at the end of the week every week? So I love this. And the breakout is as clear as day here. Go look at Immunocore. It's the same thing.
Nice successful retest too. Look at that. Just perfectly symmetrical.
And here's what you could do, right? And we do this every time a new industry group comes up on our radar and tells us it's time to really focus on this group or fish in this pond. We just look at which ones are at all-time highs. And sometimes it's great, like coal or uranium, where it's like none of them are at all-time highs. And it's like awesome, right? And then you got to look like, okay, which ones are at 52-week highs? And something like this with bios, there's always going to be stocks that are, bucking the trend and still making all-time highs, even through bear markets, because they're just inventing or innovating in a way that, the market can't punish, right? It's created a new drug or cured cancer. It's not going to go down. I don't care if it's the financial crisis. It'll go 5x. And these are the ones that are popping up, whether it's Rhythm or Immunocore, right? New all-time highs. Go look at the biotech index. Go look at other biotechs. You don't see that. So this is a leader. Leaders keep leading. Love it. What's next?
Yeah. $2.5 billion too. It's not too tiny.
CDAY. So this is Ceridian.
CDAY.
Professional services like payroll processing.
Can we talk about professional services for a second? So they stick those in the industrials, right? And a lot of them, it doesn't make sense to me, right? Because you think of industrials, right? The industrial sector, and you think of like heavy machinery, Caterpillar, whatever. At least
I'll tell you a story.
And then you look at like ADP in there, and I just picture people at their desk just typing away.
I'll tell you why they're in industrials. Because they're corporate. These are corporate things. When corporate America or the business environment in America is doing well, and I'm talking about large corporations. Typically, any large company is going to be a corporation. I'm not talking about the small business on the corner next to your house. They use Ceridian, right? They use Workday. Like Patrick said, they use ADP. They use Sodexo,
What's up?
cafeteria services,
Oh,
office services. They're going to replace the toilet paper and the paper towels and make your sandwich. A lot of these big tech companies, it's not an office, dude. It's a campus.
yeah,
No, I'm serious.
yeah.
Like a public university. It's a campus. It's huge. There's 5, 10, 20 buildings. Go to Cupertino.
Oh, yeah.
No, really.
Yeah.
Because I saw that just in the hedge fund world, but I know it's 10 times crazier. Go watch Silicon Valley on HBO. A lot of it's funny, but too much of it is very real.
Do you think a lot of that calmed down after this kind of last bear market we had where you saw, like I was just thinking about, that Brad Gerstner, he had written a letter to Facebook telling them, cut your staff, all that. Next thing you know, you
And they
saw
did.
they could, yeah, exactly. They cut 11,000 jobs.
Yeah.
They probably cut some of their professional chefs on their campus, all that stuff.
Listen, as anyone would, when you come into success, right? Especially in a really big and fast way, you get fat. Right? You start doing things that other businesses are not going to do. I can't tell you about the parties that we used to have at SAC Capital. I literally can't. I wish I could. I can't tell you about them. They were that good.
Listen, you've told me about the food truck parties, and those sound pretty good.
10, 15 years ago. It was great, right? And that's Silicon Valley, and it's been that way for a long time. So we had like a big trimming in big tech and little tech, where these companies are right sizing themselves, right?
Forcing them to get lean.
And it's healthy. It's a good thing. But the point about this one is they're going to move more or less with the business cycle, with corporate America. Ceridian, I used to remember a nasty spreadsheet I used to have to put together for like payroll for Ceridian, or it was benefits actually. But it reminds me of, just this is what corporations need. This is
And to your point, that's probably what makes this group cyclical, right? Is they are moving with the business cycle because they are, at the heart of business, right? They're at the heart of industry. So
I want my tech companies to tell me things about, secular growth, but I want my industrial companies and business support services like C-Day is classed as is an industrial, believe it or not, because I do believe that that's the right way to do it. It tells you about how the economy is moving, right? Like this is not a secular grower. This is a very cyclical name. It tends to be a secular leader within cyclical groups, but same thing. ADP, go look at their competitors or peers. They're all doing well.
but to this point, I mean, I think below 75, it's kind of hard to like that one below 75. I mean,
Yeah, I
this
agree.
one still had a pretty bad falling from grace the last couple of years. So, oh yeah, still in a 50% drawdown there. Yeah, just I'd just like it a lot more if it got above 75.
All right. Next, AYI, Wavy. This is the
Wavy.
Wavy. You know it's coming from the metal space, right?
Oh, Wavy. I like it. I like this little base here. Thank you for bringing this to us.
Oh, no, it's not. This is like tech, I guess, but I think it's more industrials. I know this one.
Yeah, this one's shown up on our scans. Look at this gap here that it's dealing with. Like this gap all the way from 2016, 2017. I'll bet you that's an earnings gap. And keep in mind, this is a weekly chart. So when you see a gap on a weekly chart, you got to pay attention. That's significant.
This one's easy, Pat. Give them the levels.
And look at how it's coming into play. 230. 230 is your clear level. 230, you play it back to all-time highs, 280. But that is clearly your line in the sand here. It's almost like a cup and handle pattern. I don't get too I'm not the pattern police here. I'm not too textbook. Like if the right shoulder isn't above the left, whatever it is, you're missing the point where if you get too caught up on the details of the pattern. Is it an accumulation pattern, a distribution pattern, or a consolidation pattern? That's what I really care about. And this one's setting up nicely, all-time highs. at 280 is what you got to be looking at. Yeah. 230 gets you 280.
I agree. All right, next. Dexcom, DXCM, medical
this one-
devices.
Yeah, diabetes company. They're actually headquartered here in San Diego. This is a big biotech hub. I think it's nice and sunny here. They can attract talent. But anyway, so
Starting in the back half of last year, when the GLP-1 thing blew up, the diabetes companies got hit really hard.
that makes sense. Yeah, and this is a diabetes company. I think they make insulin or maybe testing, maybe testing devices for insulin. Either way, they've been a traditional leader in that space. So I could see why, a new drug hits the market. I could see why they would take a hit to that. That makes sense. This one, clear level here though, pretty clear. At 130, I think the last one was 132, ironically.
Confirmation at the summer highs from last year, right?
Yeah, and I would call this a false move. I mean,
Yeah,
I'd say
totally.
the level's actually here, because it did eclipse these. It looked like it was breaking out, and then you got the fast move in the opposite direction there when it wasn't a real breakout.
So you just draw right through that.
Yeah, just draw right through it. If it's above that 130, play it back to all-time highs of 164, 165.
Okay. CI. Go.
Cigna?
Yeah.
Okay. Long-term uptrend here. A little messy these last few months here. You can see this weird action here. Looks like it wasn't even around earnings. I don't even know what that was. But here we can draw a little shelf of resistance right before the all-time highs. These last three charts have had these kind of look to it where it's like kind of near the all-time high. Like it's definitely retraced more than 60-70% of its decline, but it's very close to all-time highs, but not quite there yet. So
Yes.
I think if it's above this 315 gets you up to 340 all-time highs for this one. But look at this move. This is weird.
Yeah.
Number 11.
There are also better looking stocks in this group.
I would agree. This is medical health insurance, right?
Next, AB.
AB?
Is that Alliance? Yeah.
Alliance Bernstein. Look at this. You're getting
Draw
a
a
little...
trend line. Draw a trend line.
Yes, I will do that. Want to draw this one first. Yeah, that's a nice trend line, right? Here, I like putting in a weekly to draw my trend lines first, kind of get a big picture.
I wouldn't put it there. And I would move the horizontal one up a little bit.
Oh yeah?
I think that low in 2022 was a blow off. Yeah. That's
Yeah,
right.
you use it on a closing basis like that. And so
Oh.
yeah. Yep. Yeah, and like we were saying, this you can kind of treat it like a false move there. With trend lines, you want to draw the best fit line. I think that's the best advice there. You're looking, you don't want to get too precise. And also trading them, be aware of that too, is, don't just because you draw the trend line there doesn't mean it's actually there. You can draw trend lines in a number of ways. I know like Ian McMillan, our friend, great technician, he describes trend lines as the rate of trend. And I think that's a really good way to think about it, right? Like when it's breaking a trend line, that doesn't necessarily mean, like for example, this one, it doesn't necessarily mean that all of a sudden it's in an uptrend, but the rate of downtrend is at least slowing and maybe it's transitioning, right? So this one, if it's above this 33 level, I think you want to play it back to this little false move here, which is around 40 here. It would make sense for that to act as resistance because it was a false move. A lot of the times with those false moves, the false move becomes an area of either support or resistance because of the kind of, for lack of a better word, fuckery that kind of occurred there, right? Because you have a lot of trapped people, whether it's trapped bulls or trapped bears, a lot of people who are caught off guard. They might have bought this breakout and then all of a sudden, oh crap, it's going against them. Maybe they're just waiting and waiting and waiting for it to get back to break even, finally hit the sell button. That creates those levels.
I'll also just say we like the group. Um, this is definitely a laggard, but the trend line break stands out. I'll care more about it when we get above those pivot highs around
And
like 33, right?
yeah, and this little retest here, that kind of tells you that there's something there, right? That kind of tells you that because it did successfully retest it. So that kind of increases the validity of that trend line too.
Right. So just moving along in the chat, Liz Young, yeah, SoFi, yeah, we know Liz. Listen, we do our best on the morning show to bring everyone what we believe are the best guests, and to be able to do the best interviews, right? That are most valuable to the people who are watching us. So we also know, and we try to kind of walk that line that people want to be entertained. So, we know Liz, we know Dan Nathan, Guy Adami, more on the entertainment side of stuff, but we could bring them on if that's what
Listen,
people
I,
want.
I think you guys do a great job with your guests. And
Yeah.
and the other thing I'll say about it is I think you guys make your guests feel very comfortable. Whereas, they
Friends
go on
with a
other
lot of them.
networks, they might feel a little bit more tense, like they can't say certain things. But with you guys, I mean, I've been on with you guys before, and it's like we're hanging out at a bar or something like that. So
Well, if you've ever been on Fox Business News, or not to call anybody out, they're all the same way, right? Or any of these shows, there's a reason why we don't do them too often. They tell you what you want to talk about. We're not like that, right? So we like to ask, hey, what's important to you? But listen, we had Verone on last week, Hirsch, Todd Sohn, we had Denise Scholl today. So I think we're doing a really, really good job at bringing guests on.
you are, and you know what? Like I think it's a great way to start your morning. Back when I was day trading for a career, I would turn on either Benzinga or some morning show just to hear the tickers that people are talking about and things like that. So
But
this
entertainment is
is
good too, right? So like we'll bring some of these CNBC folks on for entertainment every now and then. We'll get them in the mix, right?
yeah.
We won't do SMCI. I feel like we already talked about it.
Well,
Mm,
we can do that real quick because I think this one's setting up really nicely. I mean,
better be quick.
yeah, we have this nice little since August, so call it a what, 5 month base here, 4 month base. More than that. So nice little base here. If it's above 350 here, you can fib it out, and you got a really strong uptrend preceding that. Now, if the base fails, if you get like a false move from this, I would be
Yikes.
running. Well, I would not walk for the exit. I would run for the exit on this
Because
thing.
because when you zoom out, even over the longest time frames,
Well,
this stock is extended.
yeah, I mean, look what's going on here. We're getting some parabolic action, right? I mean, one really good quote here from Bob Farrell is parabolic trends usually go a lot further than you expect, but they don't correct by going sideways. They correct with a really ugly, violent move down usually. And so this one has started going parabolic. You can see that it's really starting to accelerate here. And that's not sustainable. Eventually, it's got to correct, and it'll probably correct pretty hard. But right now, you don't want to fight the trend until it shows you that it's going to reverse, and there's really no evidence of that yet. So I would be long this one if it breaks 35 up to 430.
Pat, it's a secular leader. You're absolutely right. It is innocent until proven guilty. Period.
Yep.
Right?
Yep.
Just looking through here, I want you to do CRISPR, CRSP. You know how I feel about my genomics
I
stocks.
do. I do.
It's a
And
new
you know what? I
market.
respect that you know what game you're playing in it because you know you're a long-term investor in it and why you're in these stocks. You like the story, and there's tremendous upside if things play out that way.
Yeah.
So
And for me, it's like this. We all know our age, right? We might not all know that we are long-term investors, but we all know how old we currently are. And if you fall into a certain, grouping there, then you might have maybe not accepted it yet, but you are a long-term investor. You'll have to be, right? If you're 20 to 40, you're a long-term investor.
Yeah, absolutely. Or at least you should be thinking that way, right? Like
So
it's
I
I
look
think
at
it's
these.
kind of hard.
I look at these stocks. I look at the way they've gotten killed, and I think about what I know about the world, uh, and that this is probably the future of healthcare. And sure, I'd love a good discount. I like to shop the deals. And I think there have been a lot of deals in biotech. And now everybody's going to start talking about them over the next couple of weeks and months and quarters because the reversals are finally in.
Yeah, yeah, very well said. So this one here, post, I don't know if we can call them post IPOs because this was 2 years after the IPO, but you had a high right here, and that's been a key level. It's come into play a lot here, and I think that's what you use as your line in the sand right now. If it's above this 75-ish, 75 gets you to this 108. And that coincides, first of all, that's a Fibonacci level right there. That's the 38.2 retracement of this major decline. But it also coincides with all this congestion area over here. So that'd be a decent place to take profits. I'd like to see it get above that. What do you think, Steve?
Uh, I've owned it since, you know, shortly after the IPO. I bought more a few years ago, late 2022, thought it was bottoming. Definitely not in the green on those purchases yet, but I buy good businesses when they're down 80% every time, right? Just like I buy Shopify or Coinbase or Uber 2 years ago, buying this one too. The chart's not ready, at least not for me, like you're saying. I need to see the reversal. Then I'll be talking about it every day about call options and what I'm doing with
I'll
it, right?
I'll
But
say this though, if I was owning this, I would love to. I like this action, right? I'd be really encouraged by this. Is you've gotten three chances to really break down, and it just didn't want to. So I think that's information right there.
this is maybe the most innovative name in healthcare, at least of my career, right? Like what these guys have accomplished is absolutely mind blowing. They have their hands in everything, just the way it works. They're more the information provider.
Oh,
They
okay.
provide the information to the biotechs about
So they're
like
not necessarily developing therapies or something. They're more.
this is the brainchild of the Human Genome Project.
Oh, okay.
They own all that data,
Wow.
right? So it's pretty good.
Data is the new gold, right?
Right. You're betting on a bigger theme. There's probably going to be more beta and other names in the future. This one has been very high beta since it's come public. But the bottom line is new bull market for biotech. I would say healthcare more or less also,
You,
but
you know
mainly
what?
biotech. You want to be fishing in that pond.
You know
And this,
why I think we might be on like a new bull for biotech, as you just said? This group was really hated. I mean, it hasn't been an area of strength since
I know.
2015. I don't know if you remember, but biotech was the place to be after the great financial crisis. I mean, this is the biotech ETF. Stocks
Yep.
like Biogen, Gilead, these were your FANG stocks almost, almost. I mean, FANG was also doing well too, so that was there. There was a Hillary tweet. I don't know if you want to even call it that. So
I hate how you
apparently
say
Hillary,
that.
it was right after Shkreli hit the scene
But
and he raised the drug prices. And then it was during an election year. She said, we're going to really focus on drug prices. And that's when you saw it just go sideways for years. Here's the
with
thing. Like, was it the tweet or was it the fact that it had been
no,
trending higher for 5, 10 years?
with most things, it was simply the internet where truth comes out more and more these days, right? This is a problem. This is a problem industry. I think for
In
me,
what sense? For the drug pricing? Like, is that
well,
what you're
definitely
saying?
not Hillary Clinton, right? Because she never got elected or really even close to being able to have any impact on these companies. She sent a tweet, like you said, right?
Well,
Or she
and again,
Meg.
I'm not saying that that was what did it, but that's what everyone will attribute it to. This kind of sideways, or at least that marked the end of a trend, a
It's
really
tough
nice, strong trend.
whether you're insurance, health insurance, biotech, any of the aerospace and defense. Hey, you guys are at the top of the list. Sorry, right? All of these dirty industries that everyone knows are like the most corrupt. The rise of the internet and flattening the information bubble, right, is what changes things. Now everybody knows everything in this world. So it's not good for groups like bio. It hasn't been good for banks. You could
But
say
I
you could
will
say
say
the
this
same thing
though.
about financials for the
I
past
think
20 years.
because they've been neglected for so long, I think they could play catch up here. It
All I'm
is
saying, yeah, yeah,
yeah, it's been a mess since 2015,
I think they're ready. I think they're ready.
and
Okay,
I just haven't
I've done
seen
that.
them this strong, relatively strong since then, basically.
Raytheon, we're gonna skip that one. PSX, we're gonna skip that one also. I think we're just gonna just about close this out. Pfizer, you want to do Pfizer real quick?
Yeah, let's do Pfizer. Oof. Clear line in the sand here. Kind of got this little false move. Not kind of, you did get it. And you got the nice pop here. This is a tough one, man. This is just
Yeah, it
a
is.
really,
I know.
really ugly one. And I don't want to get too bared up on it because it is really, really beaten down and could easily pop here. But I think you want to wait for it to prove to you that it's going to do that. And what do you want for your confirmation? This little trend line, that's a really, really steep trend line. So you'd expect it to break soon. I mean, it can't continue falling at that rate forever. If
You
I mean,
got the shake, and now you might get the trend line break. Another thing you have to think about, right? You call it a tough one, it's a real tough one.
I mean,
Because-
look at this. If this were to keep going at the rate, it would just be
Oh.
like that. Yeah,
Yeah, it's a zero, but it won't be.
it won't. Yeah. Eventually, it'll break up.
So if there was like a Pepsi to Coke, then there would be a Pfizer to a Merck, right? So look at what Merck is doing, its chief competitor.
Oh my gosh.
That makes it really tough for me.
Beautiful
We
setup.
put a trade on Pfizer because I do believe that breakdowns are not materializing, breakdowns are failing. So that appealed to us, particularly from an options strategy standpoint.
Yeah,
I
that
think
makes sense.
selling puts in a chart like Pfizer makes sense all day in a bull market. But if you're asking me like, hey, you want to make a lot of money, you want to press the gas on something? Look at this.
Yeah. Yeah. I mean, this is, and like you said, cheap alternative, right?
And you always want to think when you go to hit that buy button, what else could I be buying with this money? Well, if you're trying to invest in healthcare or biotech or pharma or anything like that, and you're thinking of Pfizer, I would hope that Merck is also coming to your mind. And this one just looks perfect right now.
Yeah. And you know, not too long ago, resolved out of this mess here. Yeah.
All right, last question, then we're gonna shut this thing down, Pat.
Cool.
So just looking through everything right now. Question came through asking me, what is my favorite or what is our favorite industrial stock? I'm gonna kind of punt on this one and use a loophole.
Okay.
Uber. Because Uber is technically a transportation stock.
Oh, hey, you know what? I didn't check it this week. It's nice comeback here, right? I mean, let's take this away for a second. Let's take this bar away. That's an ugly look going into this week. You know, I would be on the side of caution heading into this week. You know, that to me looks like a fail breakout. But here we are. Nice little comeback here. That's an all-time high on a weekly basis. I don't know about daily. Close, very close. But you know, it came back. A little retest here. So
Yeah.
nice move.
If and when this one breaks out, you have to be involved. This is one of the best stories that I am aware of in the broader market, particularly the large cap market. Uber is growing at heaps and bounds. It's still very cheap. I love the leadership there. This one's been very, very good to us. We've been long for a long time. I think you stay long on a
Yeah.
breakout of this little consolidation here.
I like this idea.
So that's it. I think everybody's happy, Pat. We got through all of it.
Awesome. Our audience is awesome. They always bring some great charts. I'm always impressed with what they bring, and it's just so great to be able to come on here, do this, share our thoughts, and also get a glimpse at what you guys are seeing.
So thank you guys as always, Jonathan, Chris, Nippon, Fred, James, Doug, everybody. Thanks for joining us. We will be back as always next Tuesday, 1 o'clock right here on Stock Market TV. Until then, everybody have a great weekend. Good luck out there. Thanks, Pat.
Thank you.